I'll start by saying, what is price action? Price action simply means candlestick formation, right? And why is it important for us to know candlestick formation? Is because candlesticks shows us human behavior in either buying or selling, right? So what does it mean? It means that a candlestick can simply show us whether we have sellers in the market or whether we have buyers in the market, right? Meaning what now? What it generally means is, um, if we have buyers in the market, what we generally see is a green candlestick, right? We see a green candlestick. So let me label or put green on my candlestick. I know some people understand with colors, right? And this being a green candlestick, what it generally means is this candlestick is where it opens and where it closes, right? So where it opens is it opens here. This is our candlestick open. So let me show you where our candlestick opens if we are buying, right? This is our open. And when our candlestick opens, it opens like this. It starts from this point, right? Sometimes you can see a candlestick selling and then it ends up buying. What it does is when it starts by selling, the first thing that we see is it gives us a wick, right? Generally, a wick means as much as we once had sellers in the market, right? Who wanted to take over, but they were overpowered by buyers. Now, as our candlestick buys, we also have what you call a candlestick close, right? So what you might see again is you can have a tail at the end of the day that comes and looks like this, right? And this tail, what it generally means is price once reached this level, but it's not the buyers that completely took over. We also had the existence of sellers in the market. So what it means is sellers rejected. They kind of like tried fighting, although they were overpowered by buyers. Now, here is where it gets important, and this next thing I'm going to tell you is what is going to make you know when to apply your body or your tail using certain concepts, right? So this body is where price lies. This is where money is, right? This is what weighs on a candlestick. This tail is just evidence that price came at this area or price came at this area. It's tail that is evidence that we had sellers in the market, we had sellers in the market. Right. So it doesn't mean price. Right. It doesn't mean price. This whole body is what represents price. This is where the money is. This is where the weight is. This is where we say if we come to fill an order, this is where orders are, not on this tail. Right. Just as much as when we see a red candlestick. So let me mark you a red one. A red candlestick simply means we are selling, and if we are selling, what it generally means is it has to look like this, right? Now, a red candlestick doesn't mean we are in a downtrend. Just as much as a green candlestick, it doesn't mean we are in an uptrend. But it means the existence of buyers, it means the existence of sellers. So if we do the opposite, we are always going to see that on the red candlestick, it means we are going to see that we have a tail. What this tail means is we once had buyers in the market, but they were overpowered by sellers, and then our candle closed bearish, right? And just as much, we can have a tail again, which means as much as we had sellers, buyers again stepped in the market. I'm hoping we are understanding. right? So why is it good for us to know this? I've seen people, many people, not just one, not just two, not just three. What they do is when they are marking their support or resistance, they come and then they mark the tail. 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 But I want you to understand this, right? When we are marking points of interest or when we are putting our lines, we separate the body from the tail always. We separate the bodies from the tails. We separate the bodies from the tails. Separate the body from the tail. Separate the body from the tail. Because what we want to trade is price. What we want to trade is price. Right. So we can have candlesticks that can have a long body. We can have candlesticks that can have a long body like this, and then we can have candlesticks that can have a short body. What it generally means when we have candlesticks with a short body, it means we have like weak momentum. And then if we have candlesticks with larger bodies, we have strong momentum, right? So if a candlestick is a short body and then a longer wick, this simply means this is a rejection, right? So if you see your candles with long wicks, these are simply rejections. And we can also see, like, let me come here. We can also see candles having long wicks like this. What this simply means is this is a rejection. Right. Now, so like I said, this session is going to be for beginners, and I understand we have beginners that are also pros. I don't know if you know what I mean. So now what happens is, let's say we have something like a trend line. This is where I also want you to listen carefully because this might come as a surprise to someone. And I know most of the people in this session don't know about this, if not all of you. Right. Let's say we have a trend line. Like I said, today I'm going to be accommodating people who trade trend lines. Let's say we have a trend line. And we want to say when price comes to this trend line, we sell. When price comes to this trend line, we sell. When comes price to this trend line, we sell. There are instances whereby you see that price comes, it doesn't even touch your trend line, but then it sells. Or price comes, it touches, goes above a bit, and then it sells. How do you overcome situations like this? Right. As for me, when I started trading, this is the system that I was using, right? I was just waiting for price to come, hit, price, come, hit, price, come, hit. But then when I took time to learn about a candlestick, I understood something, and I've never heard anyone teach about it. Maybe there is someone who's taught about it, I don't know. But I eventually put it in my own words. I discovered that we'll go on the actual chart, don't worry. I discovered that when a candlestick buys, let's say we want to do this based on a buy, right? When a candlestick buys, right, it leaves what we call an area of wicks, right? Or more of like a rejection area, right? So what you'd find is mostly you have wicks that tap in. Instead of me drawing one trend line where I expect price to come and hit like this, I want you to see something that I did here. I generally come and touch the wick. This means next time when my price came to this area, I would expect again to come and say, as long as it touches, let me remove this one so that it doesn't confuse us. So I would say if as long as my candlestick comes and touches, it means I'm selling, right? But then there's another point in time whereby my price would approach that area like this, right? Let me show you. Where price would approach my area like this. Okay. Where price would approach my area like this. And then instead of having a wick that touched my trend line, sometimes it would just miss a bit. And then I would be devastated. Why? Because I've already missed this, right? So what I did was I started using a system whereby I would separate the body and the wick like this, separate the body and the wick like this, right? And then I would draw another trend line. So let me reduce this in size because usually it's almost accurate when you draw it, right? And I would leave this area and I would know that this area is an area of rejection or an area where wicks are supposed to play. So for me, wicks are supposed to play in this area, right? Meaning, even if my wick didn't touch my upper trend line, right, which is where I'm expecting price to fall from, it means I would already know that I'm in a zone where I'm expecting price to fall. But then here is where it gets interesting. If you use this method, even when people tell you that there's things that they call fake breakouts, with this method, you will also be good at just trading breakouts, right? So the next thing now, I would know that for the longest, price was not going to hold on this trend line. At some point, it did to come and break, right? So what most people would now do, I think even now, some of you guys are doing this, and I'm here to help you on that. Some people, what they would do was, since since a candlestick opens, right? Since our candlestick opens like this, right? Like so. So let's remove this trend line so that we do it in a realistic manner of things. So what I would do was I would know if it was gonna break or not. Why? Because sometimes you'd see my candle go up, right? But before it closes, it would then come down again. Meaning what? Meaning that what I'm left with is just a wick, which just wicked in this area. And I would be confused. Did this area break or not? But remember that that's a rejection, and there's no reason for me to buy at that rejection. But because of confusion, what I would do was I would just buy. Why? Because I would think that this area was broken. But now, to fix this issue, I started realizing that if I entered after a full body break, right? Since this is a rejection, what you would see is this color mostly would be red. Why? Right. So if I waited for a full body break, I would wait for it to come and close even above this tail. And as soon as it closes, I would start taking my entries. Right. And this is where my entry would be. Meaning that if I was going to buy, I'll just put my stop losses wherever I'd put them and go with the trend. With this method, I started hitting bigger trades. Why? Because I now understood we have two areas, which is an area of wicks. And when we break that area of wicks, we have to break it with a full body break like this. I just added my other trend line that I removed so that you now see that wicks no longer exist in this area, but since there is now a body in that area and it has managed to break in that area, what it simply means is I was supposed to start buying, and mostly what I would do was buy. Right. So let's go to the actual chart because I know some people will be like, what you're teaching us, is it even real? Can you even apply it in real life? Or do you see it? Right. So let's go to this pair. By default, it always opens. Let's go to this pair. This pair is V25, right? So I want you to see something. Let's say we take our trend line and then we draw it like this, right? What you are going to see is there is always that area that is going to separate the bodies and the tail, right? If we mark it like this, let's say we had marked it like this, it would have been hard for you to catch this move over here, right? Or even to know if this line was broken over here. But just because you now know that if you break with the body. Let's separate the bodies and the tail like that, and let's mark the area where the tails are supposed to just be playing alone. What do you now see? What you now see is this was an area where we only had tails, 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 tails. And if you want to fine tune it, you can fine tune it to here. Let's do this. Fine tune it to here, right? And what you see, this was an area of just tails, 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 tails. And then finally that area got broken. So I'm seeing another area here that we can use again. Let me show you. And I would want to, this is what people trade with trend lines mostly. Let's say now we have this area. Um, yeah, let me try marking this one. Let me take these ones per se, right? And mark them like this. What you would find out is when price comes here, would look, we had separated the bodies and the tails, right? When price comes here in this area, what you would just expect is the moment that you see that your price is left a tail in this zone. Let's say you want to enter this one, it's left a tail in this zone, you start buying. Why? Because you now know that this is a very strong area of tails. Right. So let me do this here. Let me move on to the next phase. I wasn't willing to to do the lesson in this way, but remember the market always surprises us and we always have something to say. So whenever I'm doing lessons, I always talk about these three candles, right? We have what you call, and I know most people don't know how to use these candles. So please, let's continue listening. So we have what you call ma candlestick patterns, right? And we have ma formations akasiyana-siyana when we are trading. But the two that I've found very useful are the engulfing and the morning star slash evening star, right? And most people don't realize this. When you are trading using a morning star, you are basically trading something that has been confirmed. But just because you've heard that it's called a morning star, maybe you think, the name is boring, and I'm not going to catch any trade with it. So morning stars and evening stars, generally, what they help us to do is they give us a confirmation and they give us a signal at the same time. So per se, let's say this is how a morning star looks like for guys who don't know. Firstly, we get what we call a push candle, right? This candlestick is very necessary. It's called a push candle. After a push candle, we get what we call a signal candle. And from this signal candle, what we're expecting is a rejection, meaning that we're expecting a tail, a candlestick with a longer tail. So let's say we come here and let's make it, it can either be green, it can either be red, right? Your signal candle, the color doesn't matter. But for this evening star candle that I'm drawing, an evening star candle works when you are reversing an uptrend and you are now switching to a downtrend. So what you can generally see is you can have a push candle and then a signal candle. Now, the importance of a signal candle is it's very rare. The way that it appears on your charts, it's rare. It's rare in what way? It's rare in the sense that, say you were already in an uptrend and you were buying, right? You were buying, having normal price action, healthy price action, your candlesticks were going up, healthy price action, candlesticks going up, and all of a sudden you see this rejection candle, right? Some I like calling it a hammer candle, right? So all of a sudden you see this rejection candle, and this is what's going to signal you. Obviously, it's going to raise alarm, right? This is what's going to signal you into saying, oh, okay, I've been buying nicely all along. My candlesticks were arranging themselves nicely all along, and then all of a sudden I'm coming across this. What is this? So first step is you come, you take a box, and then you box your push candle, which is your candlestick number one. Your candlestick number one is the candle that comes before the signal candle, just soon before the signal candle, right? So let me change color on it, right? And what you generally do is you box it. Now, why was I teaching you about separating the bodies from the tails? In this case, in this example, in this scenario, what you're going to see is we need an area where price is active. Now, since you now have a raised alarm and you have boxed your push candle and your signal candle, the next thing now what you need is a signal candle, is a confirmation candle. This is when you hear us say, yeah, we are buying, but for us to be able to get in a sale, we need to confirm. So people don't know what confirmation is. Confirmation simply comes from a candlestick, right? And if we get a full body break of this area, this means we now have what you call a valid evening star, right? If we get a full body break. Now, why do we need to see a full body break? If we don't get a full body break, but we get a rejection at this area, it means we haven't broken, right? Now, the reason why I said this is a pro and a learner session in the first place is if we now want to use the SMC that we are using on our advanced lessons, what you generally see is this would be an uptrend, a high, a low, a high, a low, a retracement, and a break of structure or a change of character. I'll go on the actual chart and show you that. Right. So if you are a beginner and you're confused by what I just said, just put it aside. You catch up, don't worry. So now, now what we need is we need a full body break. And once we get a full body break, we now know that we have switched from a uptrend, we are now selling. Right. But we only need that full body break in an event that looks like this. If I get two consecutive candles that help each other or that push price to break this box, what it generally means is I've broken out of that zone. I've either changed character or broken structure. If I'm using SMC, as long as they're two consecutive, right? And then I now start taking my entries. But if they're not consecutive and they give me a scenario like this, whereby they are not consecutive and I end up getting a buy and I end up getting a sell, right? These are scenarios that happen every time and people get confused. And then I get a sell. What I do is, even if it breaks out of that box, I'm not going to enter straight away. I'm just looking for, okay, let me change color so that some understand. I'm waiting for another candlestick to come and break below that and accompany, as long as I have two consecutive candles. Now I know that I'm entering this morning star, or this evening star, sorry. So whenever you are breaking a point, always look for at least two candlesticks that are consecutive in the direction that you're looking at. And when you get those two candles, start entering. Don't base off on one. Now, let me remove this here. Let me remove this. Let me remove this. Let me remove this. Now, if if I want to know that price isn't confirmed, what I'm going to see is going to fail to break this zone, which means my confirmation candle is not going to come and break, but rather I would start witnessing candlesticks that go in my direction buying, right? So let's come and put scenarios that happen. If you're someone who uses market structure, now what you know is you have a high, a low, a high, a low, a high, right? So this is the good thing about candlesticks. They contain all the data that we know. But now remember, if you have one candlestick in H1, this means in M15, these candlesticks are just gonna be how many? These are just gonna be, let me do this. These are going to be four candlesticks in H1, right? And if you have four candlesticks in H4, four H1 candlesticks in H4, four H1 candlesticks in H4 like this. These are just gonna be one big candlestick in H4, right? So in H4, it would just be one candlestick like this, meaning that you have four 15-minute candlesticks, four 15-minute candlesticks here, four 15-minute candlesticks in there. At the end of the day, what you're going to see is for a 4 hour time frame, for a 4 hour candle, you're going to have 16 and 15 candlesticks. The reason why I'm saying this is if we now take this as if we were in our H4 and this way our H4 candlestick, what you would see is, okay, there's someone who raised his hand. I think that was a mistake. So that means if we had four of those, if you are an advanced trader, what you'd see is you'd see a perfectly clear market structure playing out in this. So let's go to the actual chart and let's see what I'm talking about, right? And how it's going to help us. So what we see here is all along, right? As I've been saying, all along we are in a perfect downtrend, perfect downtrend. Then all of a sudden we see a green candle, right? Although this is not convincing enough to be our signal candle, what you will simply do is you mark the previous candle and that green candle. At the end of the day, it's gonna end up looking like this, right? When it looks up like this, you are expecting that if price comes and breaks above here, you now have a morning star. But rather, what you see, price continues and goes down, right? Again, you come. This is how you do it. By this method, you always catch good trades. Again, you come and then you see, oh, all right. I think now I have a morning star. So what do? You put a box on it. And what are your expectations? Your expectations are for price to come and buy and close above that high. If it doesn't close above, please don't be frustrated. Actually be happy because You only have a signal, but you don't have a good confirmation, right? So what do? You move on with the trend. And then again, you see, all right, I have something that looks like a signal candle. So you mark that box. What are you expecting? Price to come, break above here, right? But then it sells, right? Don't lose that. What you do is you ignore it. Why? Because you want to catch the best trade. And it. So wanting to catch that best trade, that means you have to be patient. Not every trade, you don't have to assume trades. You have to be sure, kuti, I'm now in a good trade. So again, you come again, you see a signal candle. What do? You mark that area. When you mark it, what are you expecting? You're expecting price to buy and to close above. But now I want you to look at something different. This time price didn't come and close below. What it did was it gave us a candle and two consecutive candles, the ones I was talking about, right? And then it closed. That means I would have entered here, right? And my stop loss would have not been hit. I'll teach you about stop loss placement. And then we buy. So now, according to me, whenever I get in a trade, whenever I get in a trade, I like using either my M30 or my M15. So let's say I entered my trade here, right? I entered it here and price decided to go in my direction. I wait for candle number one to go in my direction. I wait for candle number two to go in my direction. And when candle number three closes in my direction, if my stop loss, let's say my entry is here, right? My entry is here. If my stop loss was here, if my stop loss was here, okay, let me come and mark it nicely. If my stop loss was here, let me put a red color to it. If my stop loss was here, right, and then I see that I've moved three candlesticks in my direction, what I simply do is I shift it and then I put it above my entry. And if my market moves two candlesticks this time in my direction, what do? I come and take it and then shift it again. If my candlesticks, if my price move again in my direction, sometimes you might see that it can even have wicks, right? But as my trade goes, I'm constantly shifting my SL so that even if it decides to retrace on me, I know that my entry is here, and by the time I get to this point, maybe it's a $500 account. I'm already begging something like 150, $200. And even if it comes and hits my stop loss, instead of coming all the way down to take my stop loss, it comes and hits my stop loss in profit. I think there's so much to share about these topics. I'm always having a problem into saying I specifically want to teach you guys this, and then at the end of the day, I find myself teaching you something. But I'm hoping that whatever I end up teaching you is actually helping you. Right. So, like I said, this was a beginner's class, and this being a beginner's class, I hope you learned something. We're going to have an advanced class in the evening. Um, our session, we have something like a minute remaining